So, good morning, good evening, good afternoon, depending on where your time zone is. Thanks so much for joining us for our virtual session today. We're going to be talking about global megatrends in payments, particularly in the Asia Pacific region. My name is Abel Delgado. I am the marketing director for PCMI, and I'm going to be serving as the moderator for today's event. So before we get started, just give you a quick preview of what to expect. Basically, we'll have a 50-minute presentation or show, and then have about 10 minutes left over for questions. You can ask questions at any point in time during the webinar. The way to do it is if you look at your participant panel, you'll be able to see an icon there that says Q&A, and you click on that particular icon. It brings up a window. You write in your question, and we'll get it, and we'll answer as many questions as we can towards the end of the webinar. So whenever something strikes you, by all means, fire away. We can have them all logged, and then we'll get to them at the end of the webinar. So let's move right along a little bit to our legal notice. I'm not going to spend too much time because we want to focus on the actual presentation for you, but you can read this at your leisure. It basically covers some of the legal issues resolved and involved in our presentation and such. And this is a look at our speakers. And this is who's going to be speaking to you today, obviously. And we're going to get started with them right now. And I'm going to start off with our first speaker, actually, Lindsay Lear. Turn the floor over to her so that she can kick us off. Lindsay.
Thanks, Abel. Hi, everyone. Good morning. It's fantastic to be here with you. My name is Lindsay Lear. I lead PCMI. And for those of you who have been with us for a couple of years now, this is actually our third annual Megatrends presentation for the Asia Pacific region. And each year we've evolved the idea and the concept to bring you something fresh. Today, we're going to be focusing on 5 global trends and how they are playing out in Asia Pacific. And if you caught a couple of weeks ago, we started off this series with diving into Latin America as well as the United States. So we'll be able to provide some global comparisons throughout the presentation today. But these 5 global trends that we are tracking around the world include multi-rail, the battle for the microtransaction intensifies, AI becoming the gateway to commerce. Cross-border is fragmenting with growing intraregional flows. The great acquiring unbundling and the emergence of acceptance ecosystems. And B2B modernization and strategization. And I'm really looking forward to describing how these trends are playing out in Asia Pacific, which is, as you can imagine, very unique compared to the other regions that we cover. So I'm looking forward to sharing all that with you guys today. If we go ahead, if you've been with our Megatrends presentations in the past, you will have noticed that they are typically very dense with information and data. We do a very deep research dive to bring you information, data, and insights that probably nobody else will bring you in a free session. We are continuing with that. However, we also recognize that while all of that information is very useful and brings a lot of value, we also want to help drive decision making and strategic thinking at your organization. And data alone doesn't always achieve that. So we are putting a little bit of a fresh spin on this presentation, talking about business outcomes. And in the payments industry, no matter where you sit across fintech, payments, banking, there are typically 6 big outcomes that practitioners are generally looking for. And those 6, of course, there's nuances and there's a lot of variation, but we can really dial it down to these 6. So you might be looking to own the user experience. You're really owning the customer relationship. And if that is your outcome you're looking for, you're probably involved in creating some sort of product flywheel. Maybe you're trying to be the rail, and your goal then is to increase volume or share of wallet. You may be in a more protective stance, trying to control the economics, protecting margins, lowering costs, optimizing performance. You might be an enabler, looking to actually embed yourself in growth ecosystems. And so your goal is to find the right partnerships and distribution strategy. You may be looking to enable yourself into high-value workflows, especially in the B2B landscape, adding value beyond payments. Or you may be thinking about risk, and your primary function might be to defend against fraud and operational and regulatory risk. These 6 outcomes we think about constantly in the context of these megatrends that we are going to be diving into today. And we have actually developed the way we work in clients around these 6 outcomes. So if we think about PCMI's services, we think about how we can help clients grow, measure, and protect their business. And these loosely are correlated with these 6 outcomes. So if you're looking to grow, these are what you might be looking at. If you're looking to measure, you're probably going to be focused in these outcomes. And if you're looking to protect, you might be looking at these 2 bottom outcomes. All right. And if we want to abstract this even one level further, you might think, you might be able to identify what is my strategic intention needed to achieve each of these outcomes, right? If I'm owning the user experience or being the rail, I'm really looking to own a piece of the ecosystem. If I'm embedding in growth systems and enabling high value workflows, my function is enable. And then if I'm from a more protection or management position, I'm looking to optimize. And so we're going to be bringing this lens to these trends today to help you not only absorb the data and what is occurring and PCMI's read on what's occurring in the region, but also identify what are some strategic options I have in the changes that we're seeing unfold across the region. All right, so let's go ahead. And we will start off with our first trend called Multi-Rail World, the battle for microtransactions intensifies. This is a trend that's taking place, as we know, around the world and is potentially most advanced globally in the Asia Pacific region. So if we take a look, this is a massive topic and we're not going to cover the entire region. I want to zoom in on a few markets that have had recent developments and recent interesting pivots that draw attention for us today. So thinking about the top 4 markets to kind of discuss today, we have India, the big headline there, UPI pushing into credit, Vietnam, QR codes booming, in the Philippines, a central bank pushing for bank and wallet interoperability. And when we take a look at Australia, we can see the new payments platform continuing to develop and ramp up and push ever so slightly into retail payments. Okay, and you kind of see all that color scheme to depict how advanced or developing these different schemes are. These are just a couple of highlights as we take a look at the region. But what I really want to focus our discussion on today is UPI. If we go ahead, so UPI is one of the most interesting payment systems to look at globally. For any of you who really know PCMI, we spent a lot of time studying Brazil and the evolution of PIX, which has completely transformed how the region of Latin America and even the US thinks about instant payments. The equivalent of that, of course, in Asia Pacific is UPI, which has been around longer than PIX and is very specific to the context of India. Now, we have real-time payment and fast payment evolving in all different ways around the region, but UPI continues to be unique and it continues to be ahead of the game. So it's gone through kind of 3 evolutions. Once low-cost instant payments scaled across India, we started to see credit pop up on the platform. And this is really unique, and this is very novel and specific to India. So the first evolution that we saw was credit cards linked to UPI rails, right? The RuPay card issued by multiple banks in which basically interoperability between this card network and UPI. I can scan a UPI QR code and use my credit card to make that transaction. Right now, these cards are averaging around 1.2 billion US dollars in transaction volume per month, quite small compared to all of UPI's total volume, but has dramatically increased and expanded access to credit. Okay, now the next evolution of that is actually big tech co-branding digital credit cards, and that is something new. As of December of last year, with Google came out with the Flex card issued by Axis Bank, and very similar to a RuPay card that most people are familiar with. The main difference, however, being that it is issued co-branded by Google within living native into Google Wallet or Google Pay, and really is relying on the wallet for distribution. So it's digital application and digital issuance designed specifically for the Google ecosystem. Now, the more interesting evolution is what we're experiencing right now, in which which consists of cardless credit over UPI, leveraging real-time payment rails to issue bank-issued credit lines, which are disintermediating or skipping over card networks completely. Now, NCIP created the plumbing for this, announced it throughout last year. This policy has been in the works for a couple of years now and has gone live in the past couple of months with multiple different issuers. And what we're seeing is basically payments drawing off of bank-issued credit lines instead of deposits. These are being instantly approved. Specific products are being built around SME. So this is quite an interesting development considering the very low credit penetration. Credit cards, about 50 million credit card holders in the country. That's equivalent to, different estimates put it at 7 to 9% penetration of the entire population. So we're seeing this is quite an interesting development, and I'm really looking forward to seeing how it develops. That could potentially help UPI gain even greater scale. Right now, these transactions are about less than 1% of all UPI transactions on the platform. So still massive room to grow and develop and mature. Okay. If we go to the next slide, I believe it's very interesting to compare UPI with Pix in Brazil. And this is not actually a comparison I have seen before. But when we look at the numbers, something interesting really comes to our attention. First off is, thank you. We have, when we just look at UPI, right? UPI is very well known as the largest instant payment scheme in the world, 15 billion monthly transactions compared to about just over 5 billion in Brazil. But of course, India's population is massive. 1.4 billion compared to 203 million in Brazil. And when we look at the monthly transaction per capita, we actually see that Brazil has almost 3 times the number of transactions per capita per month. So we could consider Pix a more densely consolidated payment system, whereas UPI has massive scale thanks to the size of the population, but hasn't penetrated on a daily usage at the same rate of daily usage. There's a couple of reasons for this. And it really helps illuminate the inner workings of an instant payment system and how that absolutely impacts how it is deployed in the market. So UPI essentially replaces cash and small merchant payments, developed specifically for that use case as a demonetization cash conversion platform. Pix certainly plays that role, but even more so, it actually was designed to replace legacy payment methods, including bank transfers, bank payment slips, and debit cards. So for that reason, it's more deeply entrenched in the payment ecosystem and is deeply and widely adopted for many use cases beyond P2P and P2M. Again, UPI concentrated among micro merchants and QR codes. Pix is deeply ingrained in e-commerce, in B2B payments, etc. And actually behaves like a complete payment system, whereas UPI behaves like a cash replacement layer or a transaction interface. And then finally, Brazil has a higher per capita income, which simply results in more transaction frequency across the population. But more importantly is the differences in the inner workings of these systems and how, even though UPI is massive, we see that there is still exponential room for growth and deepen scale in the economy. And if we go to the next slide, credit may actually be the lever that could make that happen. So today in UPI's existing system, we have deposit funded payments. Okay, you have to have an available balance. You have to have that liquidity in your bank account or wallet account. And the economics in this system is near zero for all players. There's not that much economic incentive for any particular financial institution to really get involved or develop products, right? Now, the difference could be, this is speculative and this is a hypothesis or a prediction, but when we add UPI plus credit, we start to turn the system into a full commerce rail. okay, where you are drawing off of a line of credit, not your exclusive bank balance. And this could potentially help bring UPI into many more merchant verticals for many more use cases. It could bring increased merchant participation, increase higher transaction frequency, increase ticket size, and create economics specifically for lenders, but also for others in the ecosystem. And so this could potentially double the number of transactions per user per month, and that would bring of course the transaction volume to a astrological level, and potentially be the largest credit system globally. Okay. So that's why we find UPI to be so fascinating. But when we zoom out and just kind of look at the other developments in the region, what we see is Asia is a fantastic proof that instant payment systems are essentially dictated by regulators. Unlike other payment systems that have developed in the private sector, regulators impact these national instant payment systems more than any other. Because when we look at the different regulatory postures around the region, we have radically different results. So for example, Vietnam, state-sponsored, state-pushed, state-supported QR codes with national standards and a strategy to utilize these standards and QR codes to reduce cash in the economy. Still a very, very cash-dominant economy, but rapidly changing. Has converted Vietnam into a multi-rail greenhouse, I like to call it. Fertile territory for rapid growth, all based around QR codes. And because of the interoperability and standardization that's been driven by regulators, wallets and banks compete on an even playing field, which is unique on the global stage. In the Philippines, a different situation, right? We have fintech, specifically GCash, of course, Maya, coming out the gate, very aggressive, without really a regulatory framework, and they won the payment services distribution game, honestly. Only now are regulators moving in to try to achieve that standardization between wallets and bank accounts at the peril, perhaps, of convenience, at the disadvantage of wallets who have created interesting bilateral specific linkages. That's now going to be prohibited and required the adoption of standardized payment rails, for example, InstaPay, which will eventually probably create greater scale as we achieve interoperability across the ecosystem. But a little bit of disjointed, uneven, kind of jerky movement there. And in Australia resembles the U.S. a little bit more, or yes, it has a resemblance to the U.S. because regulators have not taken a heavy hand. This has been a bank-led development, and so RP infrastructure was built by banks, for banks, and for corporates. Really, those payment rails being used for B2B and institutional uses. Very few use cases developed for retail or small business payments, and only now are we starting to hear requests for payment, recurring automatic debit, and things like that. So great examples of how regulators can determine the fate of how these payment systems are going to evolve in the region. Okay, so if we take a look at what this trend means from a strategic point of view, the essential question we'd like all of our audience to consider is instant payment is increasingly scaled across Asia Pacific. The question, unlike other regions, the question isn't when this will happen or if this will happen or how this will happen. It has already happened. The question on the table is, how do we monetize these systems? So how will commerce change as credit develops? In each market, what model will that follow? Certainly we have the UPI model, but there's many others that could evolve. So how will commerce change as credit develops over A2A rails or instant payment rails? And what role should I play in capturing that value? And so what we've designed here is some examples of the strategic choices you all have based on your strategic intention. Are you trying to own? Are you trying to enable? Or are you trying to optimize? If you're trying to own, you might be looking to own the customer relationship. I want to own the user experience, the branding, the customer relationship, the deposits. I might want to own the credit relationship and be the lender and embed my lending in all of these new use cases that are emerging. I might want to own the checkout and identity layer to ensure those secure transactions. If I'm an enabler and I want to enable, I might be looking to enable credit products to run on A2A rails via API connectivity, open banking, things like that. I might be looking to enable merchant acceptance of credit-enabled A2A payments. I might be on the acceptance side of things. Or I might be looking to enable supply chain financing by embedding credit in B2B flows or diverse use cases in general. And if I'm looking to optimize, I might be a little bit more protective. I might be protecting against credit cannibalization by targeting net new use cases. I might want to be on the alternatives credit scoring side, looking to optimize underwriting or optimize conversion and ticket size. Okay, so this is just an example of how your strategic intention is going to determine the options that are in front of you. And you can't make clear decisions unless you have a solid set of options that correspond to the trend that you're considering. Okay, so where does PCMI come in? We love these strategic problems. We see them as puzzles, and we work with clients to help them confidently move in whichever direction they want to move in. So we might help you map the A2A credit ecosystem across all of the players that are out there. We might help you design a commercial strategy to onboard merchants to accept credit over A2A. We might help you design a go-to-market strategy as you expand your model throughout the region, or even quantify the commercial impact, including revenue opportunities, and actually assess your strategic positioning. So a very fascinating and exciting trend. I took a little bit more time on this slide just to show you our thinking here, and we'll move a little bit more quickly through the rest of the trends. Okay, terrific. Trend number 2, AI becoming the gateway to commerce. This is potentially the trend that you came to hear about, right? This is the talk of the industry and driving so much excitement and enthusiasm. And we want to break it down for you a little bit. What does the AI-enabled shopping journey and industry maturity look like? Notice that I'm not using the word agentic commerce because agentic commerce is only present at the state of final maturity of this market. What do I mean by that? We look at phase 1, AI-assisted discovery. This is when consumers are using AI chatbots and other applications to find products, to research, to figure out what they want to buy. But the payment, they're actually redirected to the merchant website and payment takes place like it would in a normal e-commerce transaction. This is where most of Latin America is. If you attended Latin America, you learned about how most of the region is still in phase 1. When we move to phase 2 is when we actually see AI embedded checkout, in which the consumer completes the purchase inside of the AI interface. ChatGPT, for example, but the user still confirms each transaction. It's not yet automated. This is where the US is, and this is where most of Asia is. We see China a little bit farther ahead towards phase 3, which is still conceptual, but pieces are being put together to actually enable this. This is when we actually have fully autonomous agentic commerce. AI is monitoring preferences, inventory, and prices. Transactions are triggered automatically within constraints that the consumer has predetermined, and budgeting and payment method replenishment are autonomous. That is what everyone is moving toward. We're not there yet, but we are getting there, and Asia Pacific is the farthest region in the world when we look at how mature this industry is. Okay, so going on to the next. Let's look at what are some of the use cases that we're seeing in China specifically. Now, Alipay's AI Pay is leading the way here. And something unique about how this is unfolding in China or Asia compared to the rest of the world is that voice command has become a key component. So how is this working? For example, we have a merchant's mobile app, for example, Luckin Coffee mobile app in China. The Lucky AI assistant interacts with the consumer. The consumer places their order and verbally says to the app, place order. At that point, the Alipay, the AI assistant calls upon Alipay's API. That's a lot of A's. For Alipay to then actually execute the transaction. Okay. Now, Alipay is processing, this was an announcement they made, 120 million transactions per week, which according to our estimates is about 1 to 2% of total transaction volume. So still low penetration here, but we can foresee this growing most certainly as merchants embrace this more and more and as consumers become more and more used to this behavior. Okay, going ahead. Now, what I think is really interesting here is analyzing the AI commerce tech stack, because it's quite different in the three regions we're going to be looking at, and it really shows how we cannot think about agentic commerce as one model. There are multiple models that are evolving in parallel. When we look at agentic commerce in the US, it is taking place first and foremost within the chat app, ChatGPT or Google Gemini primarily. Consumers are interacting. They find a product they want to buy. This calls OpenAI's embedded checkout. They select buy. That triggers the identity wallet that is connected to the transaction to appear. Stripe Link is a great example. And then the PSP behind the transaction is going to process it as normal. So in the US model, we actually can see that new players are being brought into the payment, into the value chain, specifically big tech, right? OpenAI or Google. And so we're starting to see a fragmentation of the value chain. Now, this is a different model from what we're seeing in China. If we go ahead, very important, is who's making money in this transaction. Of course, the PSP or the acquirer. In addition, OpenAI, their embedded checkout is skimming a piece of that transaction, which is why we say this is actually causing some fragmentation and some competitive friction. Okay. Now, this is a different model in the Chinese market. When we look at the example that we just reviewed in China, we actually see AI native within the actual merchant app or environment. So the checkout surface continues to be the merchant app. We're not redirecting commerce from the merchant to a ChatGPT, for example. We have the merchant app, we have the AI assistant within that merchant environment, and then we have the wallet, the AI payment orchestration that is in most cases coming from these big wallet players who are dominating the payments infrastructure and commerce in the market. So in this case, Alipay, AI Pay, or WeChat Pay would be the other example. And so in this case, Alipay is controlling the AI payment orchestration, it is controlling the identity and wallet layer, and is the payment rail. And so we actually see, whereas we see competitive disruption in the US market, we actually see consolidation and continual empowerment of existing leaders. Okay, so a totally different set of circumstances taking place. If we look at Southeast Asia on the next slide, a bit similar, kind of an intermediate phase here. We have, again, the checkout surface being the marketplace or super app, Shopee, for example, or Grab. We have that platform's AI assistant. We have that platform's checkout system. We have usually that platform's wallet or online account. But then we have a fragmented, same payment rails that we would have in a normal e-commerce transaction. So we see consolidation again around these marketplaces and platforms, but they are not the default payment rail. So that's why it's a little bit of an intermediate step between the US and China. So we see strengthening of the marketplace role, but without really changing the payments landscape to a large degree. Okay. So if we continue, to compare these, it's really useful. I find this fascinating. We want to look at these tech stacks and how they are impacting the battle for AI commerce is essentially about the battle for checkout. Who is controlling checkout? So when we compare the US, China, and Southeast Asia, we're first going to see the AI interface owner, right? We have ChatGPT in the US, and then in China and Southeast Asia, it might be the merchant, and in Southeast Asia, the actual marketplace. Then we have the checkout control, whether the AI checkout orchestration, which would be OpenAI's embedded checkout, for example. In China, we would have Alipay or WeChat Pay. In Southeast Asia, we would have the marketplace checkout. The identity layer, this is a really critical layer which controls the transaction authorization and essentially unlocking the transaction for that consumer. Again, we have a whole long list of players in the US who could potentially fulfill that role. In Asia Pacific, we see it much more concentrated to, again, that one platform that is orchestrating the entire transaction. Okay. Finally, the payment rail owner, we have that same fragmentation in the US and in Southeast Asia. In China, again, it's going to be that same wallet, which is the default payment method in most transactions that take place. And finally, so who is the economic winner here? In the US, we have our PSPs and acquirers who are the winners of always, but we've had to have an added competitor in here who is the AI platform or the big tech. In Asia, we see in China that same wallet ecosystem continues to be the primary winner, and Southeast Asia, the marketplace continues to be the primary winner. So again, we have a reinforcement of market dominance or market leadership and not necessarily a large disruption. Okay, so what does this mean for those of us who are not Alipay or WeChat or Alibaba or any of the large the half a dozen or a dozen dominant players across these markets? What does this mean for the rest of us who are trying to keep up in agentic commerce? The main question being, will AI reinforce the dominance of Asia's wallet and platform ecosystems? Our hypothesis is yes. And if so, where can others capture value as commerce becomes AI mediated? Okay, so depending on if you're owning, enabling, or optimizing, this really is about empowering and embedding yourself inside these AI flows. So you might decide to own merchant relationships through acceptance infrastructure and merchant connectivity like orchestrators or PSPs that then connect to wallet and platform ecosystems. You might be owning specialized financial products that will be optimized and operationalized for agentic commerce. You might own merchant-facing software that embeds this specific flow into business workflows. Okay. On the enable side, you might be enabling agent-ready payment credentials, whether they be cards, whether they be bank accounts, whether they be wallet accounts that AI assistants can securely use to execute those purchases. You might be enabling trust and control features to ensure that agentic commerce remains secure. You may be optimizing payment routing as AI agents become more dynamic, and become more automated. So you have a lot of options here. It's not about being the agentic commerce number one player, but embedding yourself in those flows. And so where do we see ourselves playing a role to help you do that is identifying where non-dominant players can win as AI strengthens platform ecosystems, mapping the AI commerce stack and emerging control points. Assessing partnership and infrastructure strategies are just a couple of examples as some of the intelligence and mapping that you'll need to make sense of this innovation. Okay, fantastic. Well, thank you. And I am going to take a break for a moment and actually invite Patricia to come on screen and walk us through the rest of the trends here. And I'll be back to discuss the strategic implications. But Patricia Lim, welcome. Thank you for being here and look forward to hearing your perspective.
Hey, thanks, Lindsay. So, hi everyone. I'm Patricia Lim. I'm an analyst here at PCMI and I'm based in Manila. So, I'm thrilled to be here and again, thanks for joining us. So, in this section on cross-border fragmentation, next slide, please. So, what we are examining is the fact that regional cross-border payment integration is currently developing across three different types of rails. So, the key question for practitioners here is which of these rails will scale fastest? So, at the global level and in regions like Latin America, where integration is still relatively new, that is the right question to ask. But in Asia Pacific, the situation is different. So, as you can see in this slide, regional payment integration in Asia is actually the most advanced globally. So the question here is less about whether integration will happen, but more about which infrastructure will dominate fastest. So breaking down this model, we have three main rails. So first, digital wallets, which are now becoming interoperable through bilateral or regional agreements. And next is domestic real-time payments, which are also increasingly being linked together across countries. And third, we have stablecoins, which is a new blockchain-based settlement rail that's beginning to be used in cross-border payments. So in Latin America, stable coins and wallet interoperability are in early stages and are likely to scale across different corridors and use cases. But in Asia Pacific, we already see a state of a development across all three rails. So as you'll see in the following slides, what we can say about Asia is that wallet interoperability is already becoming reality, domestic RTP as well. And stablecoins still at its early stage, but however, sorry, please go back to the previous slide. Um, however, they are starting to become part of a complex and active ecosystem. So this stablecoin ecosystem, this ecosystem involves crypto native players, fintech companies, banks, and regulators who are all working toward building a cohesive stablecoin infrastructure. So now let's look at wallet integration. So next slide, please. So in Asia, this trend has been largely led or championed by Alipay again. So there's been a strong focus on enabling cross-border payments for international travelers. So this effort is led by Alipay Plus. So it has built-in integrations with wallets across the region and all over the world. So through these integrations, Chinese tourists can pay using their Alipay wallet at merchants globally that accept Alipay in their network. So travel is the first use case where we can see this model taking shape, but the same wallet interoperability infrastructure could extend beyond international travel that will enable broader forms of cross-border digital commerce. So in this model, Alipay acts as a super aggregator of wallets across the region. So the current focus is on travelers, particularly Chinese tourists, but it represents a first step toward a much broader wallet integration in Asia Pacific. So for the next slide, please. So we discussed about wallet interoperability, but we are also increasingly seeing in Asia that the effort to enable cross-border payments, or particularly for international travelers, is expanding beyond wallets. So this trend now includes interlinking between wallets, card networks, and domestic RTP systems, making the ecosystem more complex. So, for example, we have recent alliances like partnership between Union Pay and VietQR. So this enables Chinese tourists to make payments at Vietnamese merchants. So it follows a similar model like Alipay, but instead, it leverages UnionPay infrastructure to enable UnionPay cardholders to transact through local QR systems. Then there's also Dana in Indonesia, who's doing a similar strategy. So Dana enables Indonesian travelers to make payments in countries like Singapore and Thailand by connecting its wallet to standardized national QR systems. So this approach, it focuses on harmonization and allowing a single wallet app to function across multiple markets. So we have a slightly different use case in the Philippines. So overseas Filipinos can send remittances back home by using Visa Direct to push funds directly into local wallets like GCash and Maya. So while these use cases differ, tourism versus remittances, the underlying model is similar. So global payment rails are connecting with local payment systems to enable cross-border money movement. So overall, it shows a broader trend that cross-border um, ecosystem in Asia is becoming more complex and fragmented, and there's a growing number of bilateral partnerships enabling payments across different corridors. So moving on to interlinking. So it's important to note that interlinking of domestic RTP systems have already been present in Asia Pacific, particularly in Southeast Asia, for several years. So we have seen bilateral and multilateral agreements connecting countries like Singapore, Malaysia, Indonesia, Thailand, and Vietnam. And also, India's unified payments interface has connected to Singapore and continued to expand with more banks joining over time. So, what's interesting is that the rest of the world has not reached this level of cross border RTP integration. So, Asia Pacific is advanced in this area that the ecosystem is becoming more complex and in some cases it's becoming difficult to sustain. So, because of this, governments in the region are now discussing ways to standardize these bilateral agreements. So, one example here is the Georgetown Accord, signed in October 2025, just last year. So, this meeting brought regulators together to begin laying the foundation for more consistent and technical operational payment standards across borders, so spanning QR payments, A2A transfers, and wallets. So, this effort is part of a broader initiative known as the Next 50 Common Standards Project. So, this aims to establish a long term framework for payment innovation in the region. So, while these initiatives don't represent yet a concrete solution, they demonstrate an important element, which is political willingness to collaborate. So, one of the major criticisms of RTP interlinking has always been that countries may struggle to agree on governance issues like who controls the infrastructure or whose regulatory authority prevails. But initiatives like this, the Georgetown Accord, it suggests that there's at least a growing political willingness to move forward to a more coordinated regional framework for cross-border payments. But we can't discuss RTP without, of course, mentioning Project Nexus. So, Project Nexus, this is a global initiative by the Bank for International Settlements, and it's been under development for several years. So, the goal is to create interoperability between domestic RTP systems across countries. So, the initiative started in Singapore and initially focused on Southeast Asian countries. Then, over time, interest expanded. So in 2024, the Eurozone expressed interest in the project, and India also joined discussions around Nexus participation. So To operationalize this initiative, the central banks established a new entity in Singapore called Nexus Global Payments to help move the concept toward implementation. So until recently, Project Nexus has been primarily at a conceptual level, but governments are now expressing interest, but limited operational progress. But in 2025, we've been seeing tangible steps toward implementation. So recently, PayNet and Nets were announced as technical operators responsible for building the Nexus infrastructure. So development is expected to happen over the coming years with the expected target launch around 2027. So these timelines are somewhat speculative because earlier plans had a targeted 2026 launch, but we see operational progress that's underway, and this is encouraging. So it's also worth noting that the relationship between Project Nexus and initiatives like the Georgetown Accord. So while they are separate efforts, they are complementary. The Georgetown Accord represents a political effort to establish regional alignment, while Project Nexus focuses on the technical infrastructure. So these initiatives could potentially work together to enable a more cohesive cross-border payment integration in the region. So what we're trying to show here is that, next slide, please. Regional payment integration in Asia is already becoming a reality. So over time, it's created a web of partnerships and capabilities, enabling money movement across borders. So banks, fintechs, and companies and regulators are all working closely together to make this ecosystem function. So why does this matter? So it extends beyond payments alone. So what we want to highlight is the potential economic impact of regional integration. So if we look at the largest economies today, so you can see United States ranks first, followed by China, Germany, and then India. But now consider Southeast Asia as a block. So individually, the economies in Southeast Asia are small, but together they represent around $3.8 trillion in GDP, which could already place Southeast Asia just ahead of India and make it the fourth largest economy in the world. Now, if you combine Southeast Asia with India, the region becomes the second largest bloc globally. And if you add China into the mix, the combined economic scale begins to rival the United States. So, this explains why governments and regulators are so focused on achieving integration. So, the objective is to operate more like a connected economic system, increasing the region's influence globally. So, from a payments perspective, regional integration has a number of implications. So, integration, this leads to higher transaction volumes, greater cross-border commerce, increased spending by travelers, and it also reduces friction in foreign exchange, enables faster supply chains, and it expands financial inclusion. Then at the same time, integration increases pressure on banks and payment providers to deliver better liquidity management solutions and solve the operational complexities that's associated with cross-border payments. So, overall, the impact for the payments industry is very positive. And we have geopolitical implications. So, if Asia becomes a more unified market, so regional technology and payments companies could scale more quickly in Asia and globally. So, over the long term, this could reduce reliance on traditional payment infrastructure like SWIFT and could contribute to the emergence of new global payment standards. So these are longer term possibilities over the next 10 years, but they highlight why regional payment integration is an important trend to watch. So back to you, Lindsay.
Thanks, Patricia. I think this is fascinating, and just the concept of a unified commerce block has many implications that we want to consider. And, typically corridors tend to focus on unilateral, right? China, Europe, US. However, if Asia is becoming a unified digital commerce market, how should we as practitioners position our cross-border strategies to capture regional payment flows? If that's really the focus and that's where the opportunity is, what do we do to make sure that we're capturing this potential? Depending on if you're owning, enabling, or optimize, you have multiple options here. I won't spend too much time. Just mention a couple here. Owning regional payment corridors. You might be optimizing cross-border routing and FX conversion. You might be enabling interoperability between domestic systems. There's many options here depending on, again, your strategic intention. And actually, PCMI has immense and vast experience helping companies decipher which opportunities are best for them in cross-border payments. So matching use cases, corridors, and rails to define a path to maximize volume capture is something that we've done for a lot of clients as this continues to grow globally. So I think really focusing on an intra-regional strategy is key here based on the trend that we just described. So let's continue on, and I'll turn it back to you, Patricia.
Okay. Thanks, Lindsay. So now we'll be talking about the great acquiring unbundling. So when we talk about the great acquiring unbundling, Asia Pacific presents a different situation from other regions. So globally, the term refers to fragmentation of the traditional acquiring value chain. So historically, this was bundled and largely controlled by banks. So banks handled merchant onboarding, payment acceptance, and settlement as part of a single service. So in Asia, this model never fully developed. So in many markets across the region, card acquiring never achieved dominance before APMs and local payment systems became widespread. So because of this, what we see today is not really an unbundling of acquiring, but a continuation of a fragmented payments ecosystem. So if we look at the acceptance landscape in Asia Pacific, there are several structural characteristics that stand out. So first, APMs and local payment methods are already a majority, already have the majority of merchant volume in many markets. So in some countries, they account for over half of the transactions, and in China, the share is even higher. So second, we have QR codes that play a major role in the ecosystem. So QR-based acceptance, this allows merchants to accept payments without the use of heavy hardware infrastructure, and it lowers the barriers to merchant acceptance. Then you have wallets that increasingly perform functions that were traditionally handled by acquirers, which includes merchant onboarding and payment acceptance. And then you have digital platforms like Shopee or Grab that control the acceptance layer for small businesses operating within their ecosystems. So these dynamics, they create different acceptance models depending on the size and type of the merchant. So for large merchants, like major retailers or airlines, they typically operate hybrid models. So because of their scale, they maintain direct relationships with card acquirers or usually the banks, while also working with PSPs and orchestration platforms to manage this wide range of APMs required in the region. Then You have small and medium-sized merchants who rely primarily on P2 PSPs, which allows them to access multiple rails through one single integration. And then when you go to the smallest end of the market, who are the micro merchants or like street vendors and hawkers, they rely on a small set of wallets or QR schemes and sometimes combined with card acceptance through a bank. And of course, the continued use of cash. And for global merchants entering the region, so this fragmentation means the regional aggregators and payment orchestration platforms are becoming essential to gain access to multiple markets efficiently. So the key takeaway here is that in Asia Pacific is multi-rail and fragmented by design, and this fragmentation is likely to continue shaping how the acquiring ecosystem evolves in the region. So, what does this mean for merchants? Next slide, please. So, what does this mean for merchants? So, many argue that the region may be approaching an unsustainable level of complexity at acceptance. So, in this slide, you'll see an example from Singapore. If you look at the number of payment methods or payment logos at POS together with the card reader, you can see how fragmented acceptance has become. So, as one article puts it, the average Singaporean consumer today faces multiple payment choices, but not always true convenience. So, it highlights the tension that's beginning to emerge in the region between choice and simplicity. So, at some point, the spread of payment methods may begin to reduce convenience rather than improve it. So there's also an important question about cost. So APMs, they've been widely championed because they reduce costs for merchants. So you have national QR code systems that bring merchant discount rates down to around 0.5% or even lower. And this is extremely attractive for merchants. But uh, the success of these low-cost payment methods, it's also driven a significant increase in fragmentation across payment rails. So as this fragmentation increases, merchants need the infrastructure to manage it. So first, merchants rely on PSPs to connect them to multiple payment methods. And then when complexity grows further, they begin to rely on payment orchestration platforms that connects to multiple PSPs across multiple countries. So this layer, this orchestration layer, it represents a new type or new form of payments infrastructure. So while it helps solve complexity, it also introduces new costs because on top of existing MDR and PSP fees, merchants now face orchestration transaction fees, platform fees, and integration costs. So in the past, a merchant might have worked with a single acquirer, a single acquiring partner. But today, especially for mid-sized and larger merchants, acceptance is becoming increasingly requires an entire payments infrastructure stack. So what this means is that across merchants across Asia, they are no longer simply paying for access to payment rails. They are paying for the infrastructure required to manage those rails. So the infrastructure, this includes intelligent routing, automated reconciliation, automated retries, and the increasing use of AI to optimize authorization and even manage fraud and disputes. So at PCMI, over the long term, we think that over the long term, this could lead to a rebalancing in costs. So as infrastructure costs continue to grow and around alternative payment methods, and as card pricing gradually adjusts in response to this competition, we can see a convergence between the total cost of card payments and total cost of other payment rails. So this is a long-term trend, but one that merchants and payment providers in the region should be talking about. So with all that being said, we don't want to say that fragmentation and competition are negative. So, in many ways, it's the opposite. So, when we look at the case of Hong Kong, which is in sharp contrast to much of Southeast Asia, this helps illustrate the point. So, Hong Kong launched its faster payment system in 2018, but adoption for retail payments has remained limited. So, while roughly 75% of consumers have already enrolled, only 25% of merchants adopted it. So, there are several reasons for this. So, one issue has been reliability. So, the system has experienced long downtime periods for hours on end, which makes it difficult for merchants to rely on it for continuous transaction processing. Also, the government has not implemented several of the policy mechanisms that help drive adoption in other markets. So there is no standardized QR code framework. Adoption has not been made mandatory, and incentives for merchants to adopt the system has been limited. So Hong Kong's approach is somewhat similar to what we see in the US or Australia, uh, where RTP systems are introduced, but it's mostly focused on bank transfers and P2P transactions rather than retail. So, because of this, Hong Kong still operates in an environment where cards dominate and other digital payment options are described as a maze of high costs and complexity. So, when we compare Hong Kong to markets in Southeast Asia, we can see some pitfalls of RTP systems when merchant adoption is not built into the design from the beginning. So Hong Kong lacks a unified QR code standard, participation not mandatory. Again, cross-border integration is a bit passive, and incentives for adoption limited. So, but Southeast Asian markets, they have taken a much more proactive and regulator-led approach to building digital payment ecosystems. So, um, while fragmentation and complexity may appear challenging in markets like Singapore and across Southeast Asia, the alternative, this, like in Hong Kong, may actually be worse because without low-cost digital payment schemes that support merchant adoption, small businesses will remain dependent on expensive card acceptance or inefficient cash handling. So the development of low-cost APMs has been proven important or essential in enabling the digitization of payments across the economy. So, yeah, otherwise, the markets may end up in a situation like Hong Kong where the infrastructure exists but fails to fully transform retail commerce. So, earlier we discussed QR codes, wallets, and domestic A2A payment systems being extremely successful in digitizing cash and enabling payment acceptance among small merchants in Asia. So, in many ways, these systems were specifically designed to solve that challenge. So, card networks are now responding to the shift. So, we see this globally, but Asia Pacific is one of the most active regions when it comes to new acceptance innovation. So, one of the most important developments we see here is soft POS or tap to phone solutions. So, this tech allows merchants to turn their smartphones into a payment terminal. So, there's no need for dedicated hardware, and it's lowering the barrier to card acceptance. So, over the past few months, we have some examples here. There have been launches in across the region. So, in the Philippines, GCash introduced this capability. Grab has launched tap to phone acceptance for iPhones in Singapore, and Visa Accept has been rolled out with several banks in Vietnam. So the goal here is to empower even the smallest merchants to accept card payments. So cards typically carry higher fees than A2A payments, but they also bring different advantages. So if we have card acceptance, this can attract higher income customers, tourists, and consumers who need access to credit. So at the same time, QR-based and A2A payments are deeply entrenched in the region and they offer lower costs. So what we're really seeing here is not one rail replacing another, but rather a coexistence of multiple rails in a very competitive environment. So one example here is transit. So in places like Phuket, card networks are deploying tap to pay systems in public transpo as a way to expand acceptance into new verticals. But A2A systems are also entering this space. So in Indonesia, for example, contactless A2A payment solutions are appearing in these transit environments. So if contactless A2A payments gain traction, they could challenge one of the key advantages that cards have held, which is the seamless tap to go experience. So, as acceptance continues to expand into previously underpenetrated sectors, what we could expect is not just a convergence around a single payment rail, but ongoing competition between rails across different use cases and verticals. So, I'll give it back to Lindsay to close this trend.
Excellent. Okay. So I think the main question here, when we look at acquiring around the world, we see it becoming more software driven, more embedded, and more fragmented. In Asia Pacific, it's already deeply fragmented and it's already moving towards orchestration and infrastructure rather than actual acceptance of rails. So the question we want you all to be thinking about is thinking about merchant demand and merchant need. What infrastructure services will merchants rely on the most, and where should I participate? So am I owning merchant software and distribution? Am I owning specialized acceptance solutions in key segments, or am I enabling multi-rail acceptance through a single integration? Am I enabling payment orchestration services? Am I enabling software-led checkout? Or am I optimizing? Am I optimizing payment routing, fraud detection and authentication, merchant economics? These are the questions that you want to be thinking about, all focused on this question of which infrastructure services, not so much the rails, but what infrastructure services will merchants most rely on in the next couple of years, and where should I participate? And when we think about PCMI supporting you there, right, mapping or identifying acceptance infrastructure services that merchants need most, right, actually surveying merchants and figuring out what do they actually need, mapping the evolving merchant payment stack across PSPs and other providers, quantifying new revenue opportunities, and this one is actually my favorite, designing commercial strategies in new verticals and increasing sales and marketing ROI. This is something we see companies struggle with constantly, not getting too much bang for their buck out of their sales and marketing, and that is definitely an area where we can support you. Okay, so we're a little bit over time. We're going to charge through the last trend here. I appreciate all of you guys who are continuing to tune in, which is fantastic. So let's go ahead and tackle this last trend. We're going to be talking about B2B payment modernization, which is another fascinating trend, and especially in an interoperable and cross-border environment. All right, so if we go ahead, when looking at B2B, it is helpful to consider the entire B2B payment stack, right? It starts with acceptance. It starts with the revenue capture. I'm collecting payment from my customer, and now I have to authorize and process that. I have to clear and settle it. I have to reconcile and post that transaction. And only then can I actually convert it into usable cash, disperse payments, do the clearing and settlement on the outbound side, think about treasury and cash management, and then actually think about monetizing my account payables and getting access to working capital and financing. So this entire flow of B2B is where we need to think about opportunities to digitize and make more efficient. And when we think about orchestrators, some of those we've already taken a look at in the last section, that first segment, the first half of that flow, is already starting to be addressed by payment orchestrators who are taking a little bit of the complexity out of this process. Now, on the next slide, we'll see, we can kind of zoom in to the latter half of this flow. If we go ahead, this is where, when we think about B2B transactions and tapping into ideas around liquidity, cash management, and working capital, this latter half of the flow is where there is still a lot of opportunity to bring innovation and solutions. This part of the flow, even in Asia Pacific, is continuously under digitized, and that really creates friction in a real-time payment environment, including real-time payment across borders. Okay, so we can see here the different flows. We can see here the challenges. It really is related to fragmentation of rails, of infrastructure, of currencies, FX complexity, lack of standardization. On the working capital side, low penetration of supply chain finance in general, SME credit risk, opacity, and challenges there. And if we go ahead, here we can also map to those challenges what the needed solutions are and the providers who are positioned to begin bringing these solutions. Here we have a lot of different things related to orchestration, multi-rail disbursements through APIs, real-time liquidity visibility, API-driven treasury tools, and of course this brings in the ideas of automation and AI, embedded supply chain finance, which I think is one of the most exciting opportunities in B2B payments, is actually embedding financing opportunities in different workflows. So here we can kind of see the opportunity for disruption and innovation across the value chain. And if we go ahead, what that boils down to simplify that slide a little bit, is that we can identify the 5 monetizable layers emerging in B2B payments in Asia. Okay, it starts with those reconciliation platforms, maybe going from most simple to most complex. Reconciliation platforms, payouts orchestration, interoperability infrastructure, treasury APIs and liquidity tools, and embedded B2B finance. And here we see some of the players who are already advancing in these areas. Okay. Now this is considering traditional finance, still digital, but traditional finance with respect to currency. When we think about the stablecoin environment, the cast of characters changes. We have the same 5 layers, which are really critical. And we're starting to see how the stablecoin environment is starting to overlay these monetizable layers and compete for certain opportunities in this system. So we have a couple of players here, and if you go one more ahead, we'll see that there are kind of limited roles for stablecoin, mostly through partnerships with traditional players to play in these different areas. This is incipient, this is emerging, but certainly active, certainly something to be very aware of, taking advantage of, learning about, and adopting little by little. Okay. In this shifting paradigm, one thing that is really critical that we understand is the expanding role of the treasurer, of the corporate treasurer. And for financial institutions and fintechs, that is a prime opportunity for partnership. Treasurers are increasingly required to participate in strategy level discussions because of how important payments, disbursements, cash management, liquidity, FX, and revenue generation has become within the treasury function. So this is global data marking a very powerful global trend that is occurring all over the world, in which global treasurers are expected to expand the scope of their role, invest in technology and automation, and deal with increasing complexity around cross-border payments. So this showcases how important it is to bring simple and fit for purpose fintech products to help treasurers execute on these new demands that they're facing. And potentially the most exciting part of this is actually converting the treasury and cash management role into a revenue generator. This can be done in a couple of different ways, through virtual cards in which corporates are actually gaining a share of interchange, dynamic discounting, using excess cash to pay early and earn yield, and supply chain financing, extending terms, right? The purpose of the treasurer is to keep cash and delay payments as much as possible. And so that can be done dynamically with technology, and increasingly with automation and AI to manage this, and increasingly across borders. The demands on treasurers are becoming more and more intense, which is why they need better and more digital solutions to help them cope. Okay, so as we wrap up this section, the question that I have for all of you is, if payments in Asia are becoming real time, why are treasury workflows still slow, and who will fix that gap? A wonderful question to consider. And based on who, if you're going to own, enable, and optimize, you might have different mandates or different choices that you face in answering this question. Okay, are you owning reconciliation of financial operations platforms? Are you owning treasury visibility and liquidity management tools? Are you owning embedded finance solutions? Are you actually owning the technology that you're going to offer directly to corporates? Are you enabling real-time payment disbursement? Are you enabling API connectivity? Are you enabling payment data integration? Or are you optimizing? Thinking about reconciliation, speed and data, thinking about fraud, thinking about protection, thinking about optimizing liquidity and working capital management. Now, this is an area that I personally am very passionate about, and we have helped clients do all of the following, right? Identify which treasury workflows are behind real-time payment infrastructure. What are the trends, needs, and competitive landscape by industry so that financial practitioners know how to approach healthcare versus construction versus entertainment, right? Determining the product market fit between financial providers and corporates by industry, helping clients determine where they can solve the treasury digitization gap. These are all things that are highly relevant in this digitizing environment. Okay, so I believe that wraps up our 5 trends. Again, this stuff is fascinating. We're very passionate about sharing our insights here. I want to just bring this home really quickly for you guys with some key takeaways. So when we think about these 5 trends in Asia, we kind of have a maturity trajectory here where 3 is mature, 0 is still speculative. And so we see a little bit of variation around the region, but it's most interesting when we compare it to the other regions that we have analyzed. We look at Latin America and the US, and we can see that Asia is advanced in is most advanced in 4 out of the 5 trends, with a tie with the US, although taking on very different characteristics in the acquiring unbundling trend. So when we're thinking about a Western environment, we often look to Asia for examples or to hints as to where the market is heading. In Asia, we don't have that advantage. We don't have the other markets to necessarily look at to tell us what the next wave of evolution is going to be, making us in Asia the designers of the future, which is challenging, but also absolutely what a privileged position to be in. Okay, and just to wrap this for you guys, if you were to take one screenshot throughout this whole presentation, I want you to note this slide. These are the 5 strategic questions we encourage you to consider. These were the questions that we've already reviewed in each of the trends here on one slide. Basically, what we've done is taken each trend, identified the tension that we detect in each trend, and posed it as a strategy question. How are you going to deal with this trend? How are you going to capture value? How are you going to compete? How are you going to position yourself? Okay, so take a look at that and note that for future discussions. Okay, we are over time, and I apologize for that. We're not going to be able to get to questions. We will answer you offline. I really appreciate everyone's participation. Feel free to scan the QR code to get to our website. And I want to just take one more moment to thank you for being here. And if we go to the next slide, giving you one more flavor of PCMI. You know, our attempt here, and I hope that you feel our passion and our just love of this industry through this presentation. Our goal is to be more committed to your success than any other consultancy on earth. We achieve that through deep human-based primary research, proprietary analytical solutions, and decisioning mapping to help you move in the way that we presented, with speed, with accuracy, with execution, having greater impact than you might be able to do on your own with other partners. So we, again, really appreciate your time. We would love to hear your reactions and any questions that you have. So we'll be in touch. I want to thank you, and we'll see you very soon, I'm sure. Thank you, and have a great day ahead.